Hello traders everywhere, Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Thursday, the 6th of December. Well, the big question is it a game over for Apple? We had an unprecedented drop of 6% in Apple yesterday, the biggest drop we've seen in 4 years in the stock for a single day. So the question is it over for Apple? We'll be looking at that market in depth today and be looking at every signal we've had for the year, and we'll show you just how the trade triangles would have performed and how it could have saved you money and prevented this big drop yesterday. So let's go to our next market and let's go to our portfolio and see what else. We'll also be looking at JCPenney in depth as well. That's been a very interesting stock this year. If you're a buy and hold, you're in big trouble. So watch this video and you'll see exactly what we're going to do with JCPenney. So looking at our portfolio manager, going right back, and we'll start with crude oil, which is down 2%. You can see it's minus 75, but it's really come down right to the support area that you can see in this trading range we are talking about. We have been for quite some time. So looking at the chart very clearly, you can see we've got this base build here. We're at the lower end of the range. Certainly it's under pressure. We're oversold again. So we could be at the lower end of a trading range, and I think that's probably what we're at. We've got a mixed bag here. We've got the weekly is positive, but the monthly and the daily are both in conundrums there. So you really want to be on the sidelines in this market, waiting for some sort of sign that this red triangle on the daily turns green, or if the weekly turns red. So that's what we want to watch for today, but a big down day today in crude oil. So let's clear the screen, go to our next market. Lots to cover today, so I really want to move along pretty quickly till we get to the main star of the show, and that's going to be Apple. And so looking at the Eurodollar, remember the Eurodollar, we were up against the top of the Donchian trade channel at 31. Didn't look good. Boom, big down today. And that has gone below the parabolic. I would imagine we're going to test the 129 level, which is the midpoint of the Donchian trade channel. But the overall trend remains positive, and that's what you should be looking at on that market. So let's go back to our next market. If you're a short-term, intermediate-term trader, by the way, on the Eurodollar, you should be out of the market right now. This is gold. Now, gold has been pushed down dramatically. You can see we've come off the highs around 1760 down to the current levels. There's no downside pressure. We've got a little bit of a divergence going here, and certainly if we can see the market close over yesterday's opening, which yesterday's opening at 701, I would say if we close over at 702 today, this market has probably put in an interim low. But we need to see the weekly and the daily turn up. Right now, short-term traders should be short this market. And long-term traders, this is the key thing, long-term traders, people are going to just hold this and hold this, should remain positive on gold. Gold has closed higher for the past 12 years. We are in an oversold condition. You can see quite clearly here two things right here, oversold, and you do have somewhat of a little bit of a divergence going on here. Also at the bottom of the trade channel. So normally what happens then, you're going to bounce up to the midpoint, and I think there's a potential you could see that happen. Perhaps next week, perhaps tomorrow. We'll see how this market goes. But the market's been under a lot of selling pressure just for the past couple of weeks. So let's clear the screen, go to our next market. And the next market we're going to be looking at is going to be silver. Silver was the leader in this market. Sort of a flat day today, even though it's higher. It's up 0.78%. 55 is a trading range. We've had an oversold condition, barely an oversold condition. We've come back to the lower elements of the Donchian trade channel. I'm suspecting we're going to see this market turn up, and I'd watch this market very, very carefully. This has been the leader in the metals, and when it turns up, and I would say it could be as early as tomorrow or next week if it's going to do it, and you want to get long silver. It's been really the leader of the whole pack, but this is still a very strong and dynamic market. You've seen basically if you just look at the type of formation we have, this big rounding bottom here, we've got the monthly and the weekly still positive, still pointing higher. Only the daily is the red pointing lower. And you should be out, if you're an intermediate term trader, short term trader, you should be out of silver right now, waiting for the red daily to turn up, and then you'd be a buyer. So here's the level we're looking at right around here. So it's gone a little bit below that, a little bit disappointing there, but let's see how it holds here. I think we're probably in a Fibonacci retracement level, so let's just take a quick look at that before we move on. Clear the screen off and put in a Fibonacci. Just go to Fibonacci here. We've done numerous videos on Fibonacci and how it works, so just click on there, click on here, drag it down to the lows, and you can see that's a 50% pullback, which is a normal pullback in a bull market. So I think we're looking for some sort of regrouping here and pushing this market higher. So let's go to our next market, and that's copper. I don't want to miss copper. Copper's been a good performer. It's under pressure today for the first time. You've had 1, 2, 3, 4, 5, 6 days in a row it's closed higher. Not so unusual for it to pull back, but generally speaking, we are in a bull market in copper. All of our trade triangles, you can see quite clearly, are positive. I would not be surprised to see a pullback to the 355 level, which is the original breakout point, and sort of some regrouping taking place. But we have been oversold, so it's not unusual to see some sort of pullback. We could see a pullback, as I say, to 355. Moving along now to the equity markets. Equity markets really are mixed, to say the very least. You should be out of this market right now. There's no reason to be in it. Our monthly longer term is negative. Our intermediate term is up, which means you should be in a neutral position. You should really be out of the market right now and be in cash. Being in cash is not a bad thing. It gives you the satisfaction and the less stress. If there's nothing going on, and we're just talking about the big indices now, not individual stocks. We'll be talking about individual stocks, Apple and JCPenney, in just a second. So moving right along to our next market, that's going to be the Dow. And the Dow, pretty much the same thing there, a mixed bag. Monthly for trend, weekly for timing. Timing is up, monthly's down, neutral position. You should not be in the market right here. So going to our next market, NASDAQ. Of course, this is the indices for the Apple. Apple has a 4% swing on this market, so if Apple goes up, so does this indice. But generally speaking, the overall trend, now look, we had a red and a green in both the S&P 500 and the Dow. Here we have two reds indicating the trend is still very clearly down. We're towards the upper end of the Donchian trade channel, a little bit overbought. I would say, if anything, this is the weakest of the three indices that we track. This is the weakest. So let's see what happens with this market. Now we're going to be looking at Apple and JCPenney, not Netflix, but Apple and JCPenney. So let's put an Apple on the screen here. And we're going to look at this market, how you would have done from the beginning of the year. So year to date, boom, there we are. And you can see how this market played out. Now I do have all the details of this written down, and I'm going to go through them with you. So if you went on just strictly a buy, on a monthly buy and hold situation, now you would have gotten along right several, I have to scope this out a little bit further, you would have gotten along on July 7th. So if we go back here, there's the July 7th right there at 355. I'll write this down so we get this right. So you would have been long right here, and that's on July 7th at 355.13. Okay, you would have held this position, all the pullback, everything else. You would have exited this position this time on November 2nd this year at 587.70. Okay, you would have made a profit on this position. So your profit would be profit of $232.57. Okay, that's the profit. Very nice profit. Apple had a big move. It should make a lot of money. So let's clear the screen and go to a different situation. I'm not going to go through every single trade with you, but you'll get the idea. Now this, if you remember, we talked about doing our monthly for trend and the daily for, the monthly for trend, the weekly for timing. Okay, so let's get a little bit closer in, maybe the last six months. So we'll put our weeklies in here, and you'll see where they kick in. Now you would have had a buy on December 5th, and I'll have to get back a little bit year to date, maybe a little bit further out. So you would have had a buy right here. We'll start with this buy here. This is the closest we have until the first of the year, 1st of 2012. So there's a buy here, And let me just pencil this in so you get the picture. So this is a position. The market went up because you had a buy. Remember, we had a buy. This is the key. The monthly is for trend. That's the key thing. So monthly equals the trend. Okay, so if it's a green monthly, the trend is up. If it's a red, the trend is down. And the weekly is a very important one. This is for timing. That equals timing. So look at how this worked out with Apple. So here we know we have a green monthly from July 7th of last year in 2011. So here's the first green for the year. Move up here, you're out here. So you basically buy at 393.62. Oops. Let's just get that correct. 62. Okay, 393.62. You're out here at 595.26. This produced a profit of approximately plus $201 and change. Okay, 64. Okay, that's the profit. Then you're trading in and out, moving around, and then you are finally, you're out at 656, which is on the October 2nd, which is right here. Okay, that's the last weekly you were out. So you, all told, if you follow this, I highly recommend you do this exercise when you have a chance, and you'll see that the profits, total profits on Apple using the monthly for trend here and the weekly for timing, total profits $479.34. Now look at where we are now. So that's the profit 1 year trading with the trade triangles. Okay. Now if you look at where the market is and where it's $546, and the market started off the year right here at almost $4. So it's 100. If buy and hold is 150. This strategy is 479. So you've got buy and hold. So here's where you would have started right here in the beginning, $400. It's currently trading at 546 rather. You would have plus $146. That's how much you would have buy and hold. With the trade triangle concept and approach, you would have made a profit of $479.34. I think it's 3 times as much, which I think you'll agree has to be much better. So let's take another example of the buy and hold, and let's look at a stock that's been in the news and pretty important with what Ron Johnson's been doing with that company. If you remember, Ron Johnson, we're going to be talking about a company, JCPenney. It's been around for a long time. So here's JCPenney coming up, and we're going to look at that from the beginning of the year. So there's the beginning of the year, and you're going to be looking at the signals we had here for JCPenney, and they were pretty interesting. You could do this yourself, but the reality is you have a potential for a monthly buy and short. Let's say a buy and hold. Let's start with it. I'm going to write this down. You can look at all these. I've showed you how to do this, but I'll just write these things down because it's pretty interesting. So a buy and hold. Okay, the beginning of the year, let's say you just buy the market here, and you would have bought it somewhere right around these levels. This is the beginning of the year, and that's pretty much around $34, $35. Okay, so you would basically hold buy here, and you can see from here to where it is now, you would have had a loss. In fact, that loss would have been $25. The loss would have been substantial. Hold on just 1 second. Look at this right here. So the loss would have been substantial. You can just basically see where it is from these levels. That will just stretch it across here, 34 to 18. So you can see that $16 loss. So basically minus $16. That's what you would have had a loss, just on a simple buy and hold. And obviously that's not really what you want to do. Now if you just use the monthly buys, so let's clear the screen. If you just use the monthly buys, and I'll put those in, they're already in, but I'll just take off the weeklies. If you just put those in, you can see we've had a couple of trades here, and then there's the last one on the 9th of November at 2040 saying be out of the market. The market's trading currently around 18 and change. But if you did a monthly buy only, you would have had a loss of $8.49. Okay, less than a simple buy and hold. Is that good enough? I don't think so. Now, if you had moved a buy and hold short, I'll write everything down for you here. If you had moved in a buy and short position, you would have had a profit of $1.50. Not great, but using the same strategy we showed you with Apple, the weekly for timing, the monthly for trends, you would have had a profit in this stock of $15.95. Let me write everything down so we can look at the strategies that we're talking about. And you can go through this yourself. You can verify this very easily looking at this stock. So a buy and hold, you'd have lost approximately $16. So it's a loss, $16. I'm just going to round this off, but you can pretty much see what we're talking about. $16. Okay, using the trade triangles. We'll go through each situation here so you can get an idea. So if you use the monthly buy only, so it's monthly buy only, okay, you would have had a loss of $8.49, okay? So you basically cut the loss in two, which is good. Had you used the monthly buy and short, so we just put here monthly buy and short, you would have had a loss. Actually, you would have had a profit, excuse me. This was a loss, as was this is a loss. You would have a profit of $1.50. Not terribly exciting. However, if you use the monthly weekly strategy, which we showed you with Apple, and it's the same with this, every stock's the same, monthly weekly strategy, you would have had a profit of $15.95, okay? So what's best? A profit of $15.95 or a loss of $16? I think you'd have to agree that the profit's much better. So the key to this stocks, in our opinion, not every stock, but certainly most of the majority of stocks, and so you're going to be looking at big liquid stocks, is you want to use the monthly, which is right here, for trend, okay? And right now at JCPenney, the monthly trend is down from 20.40. It's currently trading at 18.15 right now, okay? And you want to use the weekly for timing. Okay, and this is the weekly right here at 23.68. So that changed around when the monthly hit at 20.40. That went into a negative mode. So using this strategy right here, these two strategies, it produced that profit, $15.95, which I think you'll agree is much better than a loss of just a buy and hold. These are not buy and hold markets. You really need to be a little more active and use the strategies we're talking about with MarketClub's trade triangle technology. It's very powerful, easy to use. Don't mistake blips for just rumors or anything you see with the talking heads on any of the shows. Just watch the trade triangles and you will make money. Hey, this is Adam Hewison from MarketClub. Thank you so much for stopping by. I won't be here tomorrow. I'll be traveling, but Jeremy, you'll be filling in for me, and we'll fill you in on all these markets. But have a great trading day. and we'll see you soon.